Everybody knows we've now got a supply chain crisis, but for some companies, it's a supply chain opportunity. Companies like Prologis, the Cramer-Fave Logistics Real Estate Investment Trust that owns warehouses and fulfillment centers all over the world that it then leases to companies, big companies like Amazon, FedEx, UPS, and the like. After rallying 70% last year, Prologis has sold off this month, in part because of the rotation out of high multiple stocks and in part because of simple profit taking. I think it's a good opportunity to buy. When Prologis reported yesterday morning, they gave you a nice top and bottom line beat with excellent full-year guidance. Management's forecasting a 6 to 7% increase in same-store net operating income. That's the metric you need, with more than $5 per share of core funds from operations, when Wall Street was only looking for $4.66 a share. That's a tremendous forecast, yet the stock's only up a few bucks. So let's take a closer look with Hamid Moghadam. And Hamid is the co-founder, chairman, and CEO of Prologis. He's been on many times, and he has really got a bead on what's going on right in this country. Mr. Moghadam, welcome back to Mad Money.
Hi, Jim. Good to be talking to you again.
All right, I want to go right to it. There's a line. You don't mince words. This is market dynamics are highly favorable. Ready? Demand has never been stronger. You are telling me that this right now is the best time that Prologis has ever had in business. Why?
That's right. I think it's a confluence of factors. I think on the demand side, we have e-commerce accelerating, and that has obviously even gotten stronger momentum because of e-commerce. And then we have a structural increase in the level of inventories needed in the economy to build some resilience against things like pandemics and natural disasters and the like. So on top of normal consumption growth, you have these two structural factors that are going to be with us for a long time. And at the same time, it is getting increasingly difficult to bring on supply of new product, new real estate, warehouses in the big markets where people are consuming. Everybody wants their packages the same day or the next day, but they don't want the warehouses in their neighborhoods. So tight supply, very strong demand, driven by some long-term factors, and vacancy rates are the lowest that they've ever been, and rental growth has been the highest it's ever been. And it's a global phenomenon.
So what are you going to do? You can borrow at 1.1%. You're obviously the best at what you do. You have 1 billion square feet. But are you out of land to build? Do you have no more space to put things up?
No, because we've been, over the years, always looking for land opportunities in these markets. They have long gestation periods, but we control enough land, much of it owned, some of it controlled via options and the like, to build an additional almost 200 million square feet, which is another $26 billion worth of product. So we're in really good shape on a relative basis, but the rest of the industry doesn't control anywhere near that kind of land for growth.
And there are a lot of people who feel that e-commerce was something involved with Omicron, with COVID. You're in a position to really know e-commerce, and you've got everybody. I mean, it's not like you're dominated by one. If anything, do you see it accelerating?
Oh, absolutely. I mean, you know, the COVID situation introduced a whole range of new customers, older generation, to e-commerce, and we got used to getting a lot more variety of goods through the e-commerce channel, whether it's more groceries and all that. So the percentage of retail that's accounted for by e-commerce has gone from the low to mid-teens to the low 20s, and that number is going to keep growing. Because, you know, if you look at the kids that were born when the iPhone came up, who are in their mid-20s now, they don't even know what a store is. So, you know, I think it's going to be going up. I don't know what the limit is, but I can tell you that it's going to be a problem for probably not the next CEO, but maybe the CEO after that. So it's going to be a while.
But you did mention that the cost of labor, well, you said it's been bad for 10 years, but it's not getting better at all, right?
No, it's not just the cost. It's just the sheer unavailability of labor. And that's forcing our customers that are using our buildings to invest in technology. And of course, the big ones can afford to do it. But the small and medium-sized businesses, which is the core of the distribution business, they're really having a hard time coming up with the capital necessary to make these investments. So that's a business opportunity. That's a new line of business for us that in addition to what we call Prologis Essentials, which is our other line of products and services to support our customers, can be a huge business opportunity for us.
Right. I mean, one last question. From your vantage point, supply chain's still tough, right? It's just not getting better, the crisis.
Yeah, they've just moved the boats offshore, so you can show them on a visual and put them on 60 Minutes or something.
Well, look, I mean, I don't want to ever say that things aren't good in the country because I think they are, but Prologis is the way to play it if you want to know both e-commerce and income, which I think a lot of our investors want. Hamid, I've got to thank you. That's Hamid Moghadam. He's the co-founder, chairman, CEO of Prologis. And boy, I got to tell you, from the bottom, in 2009, you have been the best there is. Thank you, sir.
Thank you.
Stay with Cramer.
Coming up, there's big energy in banking. Cramer runs down the big bank earnings most important to you. Next.